Well, hello and welcome to this brand new edition of Morning Trade on Moneycontrol. I am Nandita Khemka. Well, over the next 30 minutes, we'll be talking about the cues for trade, the solid run that we have seen on the Midcap index and whether or not this party will continue or not. We'll be discussing that with Pankaj Tibrewal of Kotak Mutual Fund. We'll also be getting you Shivangi Sarda of Motilal, Oswal Financial Services to discuss stocks like Adani Group, Torrent Power, Coal India and the likes. And we'll also be getting all your stock-related queries answered by her. So if you have any queries, send them in to us on our live feed and we'll have them addressed by her. But before we do all that, let's take a look at the top headlines at this hour. Well, it was a solid session for Wall Street overnight. The S&P 500 ends at highest level since August last year. In fact, Nasdaq too notches its best close so far this year. The street looks ahead to the Fed policy next week and, of course, even the inflation data that is due to come out this week. Asian markets edge higher ahead of the release of Chinese trade data for May. SGX Nifty 2 signals a higher start for the Indian market. It is trading above that 18,700 mark as we speak. World Bank trims India's FY24 growth forecast to 6.3% versus earlier estimate of 6.6%, but believes that it will remain the world's fastest growing economy. It also expects global economy to grow at 2.1% versus 3.1% in 2022. That's a little higher than its January forecast of 1.7%. Also on the show today, we put the spotlight on Adani Group stocks as BSE revises circuit filters for 4 stocks. Also in focus will be Torrent Power after it inks pacts with Maharashtra government for projects worth 27,000 crore rupees. And we'll also be talking about Coal India that has seen a weightage increase on the FTSE index. Right, we are now joined by Pankaj Tibrewal of Kotak Mutual Fund to discuss about the entire mid-cap universe and how it has seen a very good rally, and in fact the mid-cap index has also hit a fresh high in recent times. Good morning, Pankaj. It's a pleasure having you on the show. I want to ask you, mid-caps have been on a tear. In fact, it has been a party of sorts as the index has been hitting record high consistently. Do you think FOMO will drive more people to attend this party also? Amid the run-up, should one chase growth or look at value investing now?
Good morning, Nandita. Mid-caps and small caps is a great space to be in if you want to express your bullishness on India. Let's look at the last 20 years data, which will give us cues for the future. If you look at the last 20 years, India GDP has multiplied 7x, and India has delivered 10% nominal GDP growth, the second best in the world after China. And what has led to that, and that has actually translated in a very strong market performance. And BSE 200 has delivered 16% CAGR over the last 20 years. But the most interesting point is that if you look at over a 5-year rolling period in the last 20 years, India has generated the maximum number of multi-baggers, which means 10x returns over the 5-year period. And that number stands at 54%. And when you analyze most of the emerging markets and developed markets, that's the largest share. The next one is at 30-35%. So clearly, India is a land of opportunities. India is a land of alpha. And if you can keep your head down and work at the ground level, there are many opportunities as you move from 3 trillion to 8 trillion and 10 trillion eventually. And many small cap companies, mid cap companies finally will become large caps. However, in the short term, there is always volatility in this space. The risks are also high because the mortality rate is higher than the large caps in this space. So one needs to navigate it a little carefully. In the recent times, the reason you have seen a very sharp move and the market rally has been more broad-based because of the earnings. If you look at the first 9 months till December, and you look at the NSE 500 companies, there are 78 companies which are BFSI companies and 422 which are non-BFSI companies. And till first 9 months, BFSI PAT growth was 50% and non-BFSI had an earnings degrowth of almost 8%. In the fourth quarter, the contraction actually from negative 8% came down to negative 2%. And many of the companies in the non-BFSI space, which actually matters in the mid and small cap space, saw very sharp expansion on the margin side led by lower commodity prices. And also, please note that in the full year FY23, 245 companies out of the 422 non-BFSI companies
Right.
saw their working capital improvement and cash flow improvement. And that actually led to what we are seeing in the rally on the mid and small cap space. But please take this, sector with the caution. Take this, mid and small cap with a little bit of caution. Volatility could be there. But if you have a 3 to 5 year horizon, you cannot ignore this space if you are bullish on India from a medium term perspective.
Right, that's the entire view on how the mid-cap rally has panned out. Pankaj, after the recently concluded earnings season, which are the mid-cap themes that you would watch out for in this space now? There is a lot of optimism around the capital goods space. Mid-cap IT as well deserves mention, given the fact that it has outperformed its larger peers when it comes to earnings. Do you think it's time to look at some of these, some of these spaces when it comes to the mid-cap universe?
So what we are bullish on is the entire revival in the manufacturing space, which is led by PLI, which is led by China Plus, which is led by import substitution. And this capital good and the infrastructure space can be spanned across different manufacturing sector, consumable, capital goods, and sectors which are catering to China Plus One. We believe all of these themes are represented by mid and small caps. Because if you look at a Nifty, about 55 to 60% of the revenues of Nifty companies are dollar denominated. That means they derive their revenues from outside India. And if you want to express your view on domestic growth, mid and small caps is the space to be in. So capital goods, infra, manufacturing, the entire pack is looking extremely good from a medium-term perspective. The second one theme which we are positive on is the entire revival in the residential real estate cycle. This is the second year we are in where the property market is doing really well. Instead of expressing our views on the real estate developers, we are positive on the entire home improvement space, whether it be tiles, plywood, cement, consumer durables, white goods, mattress, and so on and so forth. So whenever the big elephant real estate moves, 200 industries along with that. So that's another theme. The third one is the auto and space. We believe autos are doing extremely well. And the clear derivative of that is some of the companies which are great in the auto ancillary space. And we have a positive view there. The dark horse could be pharma. There are many good quality mid-cap companies in pharma. For the first time in the fourth quarter, there has been no price erosion further in the US generic space. We have seen quarter on quarter either improvement there or a flattish part, which is a welcome move in the pharma sector after a long time. So these are few of the spaces we believe the next 2-3 years could be very strong in terms of earnings growth.
Right, and lots of themes to watch out for, home improvement, manufacturing, pharma. But what about banks? Do you think banks, the upside that we have seen in banks has kind of run its course? Or do you think, with interest rate cycle peaking out, we can see more upside in some of these banks? And what is your preference here, mid-cap versus large cap right now?
So in banks, what we have seen over in the past is that large caps have the wherewithal to ride the cycles. And our preference in banks are towards large private sector and few public sector banks. On the mid caps, we are positive on few NBFCs. I think the interest rates peaking out will help the NBFC sector because their cost of borrowings will come down over the next 6 to 12 months, and that will help on the NIMs. So if you look at banks, we are positive on the large cap private and public sector banks. And on the mid caps, we are more positive on few of the NBFCs, which have survived the entire cycle over the last many years.
Right, so large cap banks and in the mid cap space, NBFCs should be watched out for. With that, Pankaj, thanks a lot for taking out time and joining in this morning and sharing so many themes to watch out for in the mid cap universe. Well, with that, let's also bring on board our technical expert for today, Shivangi Sarda of Motilal Oswal Financial Services is joining in this morning. Shivangi, always a pleasure having you on the show. Let me first begin by asking you, what is your prognosis on the Nifty, given the fact that, we are around that 18,600 mark. Yesterday, we managed to stage a very smart pullback in the last half an hour of trade. Do you think we'll build on that momentum today, or do you think markets will remain sideways ahead of the RBI policy outcome tomorrow?
Good morning, Nandita. Thank you for having me on the show. So yes, we've seen that yesterday, even after a soft opening, we saw recovery was seen in the last hour, and this clearly indicates that supports are quite intact, strongly placed, and the index is facing some sort of hurdle on the upside because of lower wicks, and there is a lack of momentum and follow up on the higher side. But overall, supports are being respected quite a lot. So any declines would be utilized for the buying opportunity, and we could see immediate resistance at 18,666 and then 18,750 levels. So the strategy for today would be buy on decline for these levels, and the support would be placed at 18,442 levels.
Right,
Now,
by
talking about Bank Nifty, we've seen that this index also saw some sort of consolidation in yesterday's session, but it gave a closing, a positive closing, and we've seen that here as well the banking stocks are remaining like on the support zones as well. So overall, the structure looks quite positive. Week on week basis, we've seen that continuous buying can be seen. The index is cheering at lifetime high zones. So of course, there is some sort of consolidation which will be expected, but overall stance is positive, and we could utilize any dips towards 43,750 for an upside towards 44,500 levels.
Right, buy on dips is a strategy, and those are the levels to watch out for on the Nifty as well as the Bank Nifty for today. But Shivangi, without any delay, let's go over to the stock of the day today. That should be Torrent Power, given the fact that it has inked 3 large hydropower projects with the Maharashtra government worth 27,000 crore rupees. In fact, it intends to execute those projects rather over the next 5 years. If you look at the stock, Torrent Power, I think it is up somewhere around 12 or 13 odd percent over the last 6 months. In fact, yesterday also it was fairly buoyant, up somewhere around 4%, knocking at its 52-week highs. How should one trade into this counter now, Torrent Power?
Absolutely. We've seen a consolidation breakout, and it surpassed its previous hurdle of 600 zones. So, there is some sort of follow-up buying also, which is looking quite positive for the stock. In fact, the entire power space is looking quite positive if we talk about the other stocks like Tata Power as well. So definitely one can hold on to this stock for a level around 636 levels with a stop near 600 zones.
Right. Before I move on to the queries for the day, let's also look at Coal India. FTSE has increased its weightage on the index, and in fact, it expects inflows to the extent of $18 million or thereabouts. Now, if you look at the stock, yesterday it was fairly quiet, and over the last 5 sessions, it has shed somewhere around 6% or thereabouts. But nevertheless, it is inching towards its 52-week highs. What are the charts saying about Coal India now?
So looking at Coal India, we've seen that from the last 2 weeks, this stock has faced some sort of profit booking decline, and right now it is trading below its 50 exponential moving average. So my stance here would be to wait and watch for these levels, and we could, wait up to 222 zones, and the upside resistance comes to around 235 levels.
Right, those are the levels to watch out for on Coal India. Let's take up some queries then. This one is coming in on Tata Chemicals. Vivek Bhatia has written in and wants to know your thoughts on this counter. It saw a very good rally, I think, just a couple of days ago. It was up somewhere around 5%. Yesterday it cooled off a bit. But, there's good news coming in, with respect to the Tata Group inking a very important EV battery unit MOU with the Gujarat government, and that would bode well for Tata Chemicals going forward. So do you think any dips should be utilized to buy into this counter now?
Looking at this chart structure, we've seen that weekly it has been consolidating in a very narrow range from the last 1 year per se, and we've seen that to 2023. So we've seen that this stock is somewhat unable to surpass its range of around 1060 levels. So resistance over here would be placed intact, and on the downside, we see support near 980 zones on the immediate levels. Now, this stock, of course, it saw a good run up, but then follow up was slightly lower in momentum. So, my stance here would be that the stock would trade in a range bound manner. So, we could look out for these levels, 980 on the downside and 1020 on the immediate upside for a range bound move.
Right, that's a strategy for Tata Chemicals. But looking at the banking space, some of these private sector banks have done extremely well. Axis Bank has gained somewhere around 10% over the last 1 month ever since it has reported its earnings. We have a query coming in on our feed from Vasudevan, and he wants to know your weekly target on the stock. What would you say?
So looking at Axis Bank, of course, this stock has given a breakout and done extremely well. And we've seen that some sort of continuously we've seen buying interest can be seen in the stock at any small declines. And short covering move was seen after that. Longs have been also started to build up in this stock, so quite positive. And for the upside, we look at 1000 levels in this stock, and 950 would act as an immediate support levels.
Right, those are the levels to watch out for on Axis Bank. Let's take up a query then on Goldiam International. This one is coming in from Satya CK and wants to know your thoughts on the stock from a long-term perspective. He bought it at a level of 170 rupees or thereabouts, and the stock is somewhere around 133 at the current juncture. So he's making some bit of loss here. What should he do?
So we've seen that this stock is moving quite in a laggard manner, but I'm afraid I don't, track this stock very closely, so I won't be able to answer on this one.
Right, no worries. Let's take up a query on Z then. Couple of queries coming in on this stock. Rakesh has written in, and he holds somewhere around 500 shares at 250 rupees a share. And he wants to know how much time would it take for this share to in fact come back to these levels, and he has a time horizon of about 4 months or thereabouts.
Okay, so looking at this entire space, we've seen that some sort of consolidation can be seen over here, but this stock specifically, we've seen that the stock has seen a good amount of run up over here in the last 1 week. But again, now it is trading above its 50 exponential moving average. But even before, we've seen that it has struggled to stay above those levels. So I would see some sort of consolidation over here moving forward, and we could expect around 205 as a resistance zones upper band, and the lower band would be around 195 levels.
Right, I want to take up a query on IEX next. We have a few queries on IEX on our feed. The stock was, in fact, Ishu Singh had written in, and the stock was down given the fact that it has seen a decline in pricing as well as volumes on a YY basis. Do you expect more weakness on the charts for this one?
So this stock has given a weekly breakdown, and we do expect some sort of pressure over here. And but the good part is we've always seen a good run up from the support zones. So even on the longer time frame, if we look at the chart, any declines was followed by a very sharp, quick recovery. So, of course, we would see some sort of decline moving further towards 140 levels. And the upside, we could see the levels at 150 levels.
Right, Shivangi, before I take up more queries, I want to talk about the Adani Group of stocks. Every day there is some bit of news flow on, this group of stocks. But very recently, of course, the news flow that is there is the fact that BSE has revised circuit filter limit for Adani Green, Adani Transmission and Adani Wilmar to 10% from 5%. But notably for Adani Power, the circuit filter, or in fact, the circuit limit has been increased to 20% from 5%. A fairly good set of bit of upside expected to come in on these few stocks in today's session?
The entire Adani Group is quite volatile, and so because of that, we don't track the entire space, and I wouldn't be able to answer anything. And apologies.
Sure, sure. Let's take up a query on the IT pack. We had a query where a gentleman was asking whether to, stay invested in those large cap IT stocks like Infosys and TCS. Rupak Mehta, in fact, had written in, and he wants to know that, he's been invested in Infosys and TCS since January 2021. And since then, both stocks are down 16% and 3% respectively. He wants to know what strategy should he adopt on these stocks. Is it time to exit on any bit of upside, or time to hold on and wait for the next 2 to 3 years when things start looking up for the IT space?
So we've seen that the entire IT space, the run-up which we've seen, that it was entirely led by mid-cap IT stocks, and even further, we feel that the upside over here in the mid-cap space is quite a lot in potential than as compared to the large-cap names. Now, the large-cap names might also get a tailwind from the entire move, but then again, it will move in a very laggard manner. So I would suggest we could stay with mid-caps names like Persistent Systems or Emphasis. So any declines over here would be a good opportunity to get into these stocks.
Right, use any declines to get into the mid-cap IT space. That's the view from Shivangi. Shivangi, what's your call on Bajaj Finserv? We are getting a few queries on this stock as well. Chatla Murali has written in and wants to know your thoughts on this stock. Yesterday it was up 1%. Last 5 days it has gained somewhere around 1.5% or thereabouts. But it's quite it's quite a journey to its 52-week highs, which is somewhere around 3,500 levels. How are the charts looking on this one now?
So of course, looking at Bajaj Finserv, it's quite high it's quite lower from its 52-week high levels. But then again, the chart structure on weekly frame has proved out to be very consistent, because we've seen that support base are shifting higher from the last 10 weeks. So continuously a good support was taken after 12, 15 levels, and after that we've seen continuously a good run up from those levels. Now on daily frame, if we look at the chart structure, it is trading above its key exponential moving average, and looks like a next target would be around 1530 levels with support near 1450 levels.
Right, those are the levels to watch out for on Bajaj Finserv. The next query is coming in on Vedanta. This person holds somewhere around 500 shares at a level of 300 or thereabouts. Now, if you look at the stock, it is somewhere around 277, so he is making losses. But over the last 1 month, in fact, the chart structure has been pretty volatile, but it has lost somewhere around 1% or thereabouts. How should one go about trading in this counter now?
So looking at this entire space, first of all, this is a very high beta counter. This entire space is very high beta. And one should apply a very strict stop loss while trading in these stocks. Now, looking at Vedanta, particularly, the chart structure is not quite, very positive, because it is trading in a very consolidative manner, and no follow-up was seen after the stock, crossed 300 levels. So that would be a little concerning over here. We could look at support of 270 levels, and on the upside, 285 would be a level to watch out for.
Right, that's a level to watch out for on Vedanta. Let's talk about Gravita India. We have a query coming in from Debu K, and he wants to talk. He wants to know your thoughts on this stock. Yesterday, we saw a steep fall of somewhere around 5 to 6%, intraday. But on a YTD basis, this stock is up 30%. It's come under a fair bit of selling pressure over the last 5 days. Anything one should one look at buying into the dip right now, given the fact that on a YTD basis it has done fairly well?
Looking at, of course, the stock on the year-to-year basis from the last 3 years, it has outperformed. But if you look at the immediate stance, the weekly is taking some sort of a pause over here. And we could wait for a little more decline over here to start accumulating. I feel there could be a scope for adding the stock near 565 levels. So watch out for those levels with a little resistance near 600 zones.
Right. Before I come to your pick, Shivangi, I want to ask you one last question on, the defense pack. We have seen the stocks like Cochin Shipyard, and even, a lot of these shipping stocks rather staging a very smart uptick over the last few sessions. Should one look at the riding this momentum or wait it out and once the dip sets in, they should look at buying into these counters?
Now, if you talk about the entire defense space, I'm liking HAL, Cochin Shipyard, and Masdog. So all these three stocks are looking excellent from these levels as well. And one could look out for these stocks. If we talk about the levels, the Masdog stock is looking quite positive for 1070 levels with a support near 1000 zones. And even Cochin Shipyard, if we talk about this stock is also, rallied up in the last two sessions, and follow up can be seen over here as well, which is quite positive. So we could watch out for around about 600 levels over here with a stop near 560 levels. And HAL is also looking quite positive and was on our radar from a very long period of time. It is, respecting its key exponential moving average as well. And from the last 3 days, we've seen quite a lot of, buying interest as well. So any small dips could be utilized as a buying opportunity here for an upside towards 3550 levels and a stop near 3340 levels.
All right. Look to buy into some of these defense names on dips. With that, Shivangi, we have come to the end of the query session, but tell us, what are you recommending for our viewers this morning?
So on my radar is first of all the from the cement space, we've seen that this entire space has got quite a lot of momentum, and from that pack, I'm liking Ultratech Cement. So of course, it'll get the tailwind from the sector as well, and the stock is looking quite positive because it has given a breakout on the daily frame from its narrow consolidated range of the last 4-5 sessions. Even on weekly frame, we've seen that the base is gradually shifting higher, which is quite positive. So recommending a buy here with the target near 84. 30 levels and a stop near 7950 zones. And my second pick would be Deepak Nitrite. So we've seen that this space has also seen a lot of short covering move along with longs being started to build up over here. It is a kind of a triangle breakout that we are seeing on the daily frame, and it needs to hold at these levels for it to sustain. And the structure is looking quite positive for an upside towards 2200 levels on the immediate side and with a stop near 2100 levels.
All right, Ultratech Cement and Deepak Nitrite, two stock recommendations coming in from Shivangi this morning. With that, Shivangi, thanks a lot for taking out time and joining in this morning and addressing all of your queries. Well, with that, we've come to the end of this edition of Morning Trade. Thanks a lot for watching. And if you couldn't take up your queries today, don't worry, we'll try and take it up tomorrow. So don't lose heart and keep sending in your queries. But with that, it's a wrap on this edition of Morning Trade. From the entire team, thanks a lot for watching. But don't go anywhere because coming up next is Opening Bell.